So as always, we got to break down the data and what's happening economically right across the country. And as much as I'm going to talk a little bit about Alberta,
I know they call me Mr. Alberta, but again,
I'm not really attached to Alberta in the way many think. I'm just looking at the data and going, Alberta remains a strong economy and a great future, I guess, for real estate investors. Now, that's not to negate all the other opportunities that might live across the country. And I'll talk a little bit about that, but I'm going to be high level in some of this data, and then you can unpack specifically in the areas that you're interested in investing. So when we look at Canada overarching and the macro, if you will, we have to look at the productivity. Now, as I spoke about at the last Rein It In, we talked about when the Bank of Canada said, in case of emergency, break the glass. And that was in regards to productivity of Canada or lack of productivity. And as I've shared many times, much of what is in Canada's way in growing is the fact that our economy is primarily driven by real estate. Manufacturing trends down. Import exports are pretty much zero. We're not tapping into the many resources and getting them outside of our country. We're not exporting goods the way we could. We're not spending money on research and development. Now, this is all to say that, is this going to change anytime soon?
I think not.
But we have to shine a light on the fact that our productivity remains low. Now, as you see in this chart, when we compare it to the US, and we see the trend is down in terms of productivity. And we're going to support that with one other fundamental that we're also seeing, and that is, where are all the jobs going and where are they? So where are all the jobs being created in Canada right now? And the data is actually quite sad. So we can't speak to productivity without looking at what's driving our productivity, or in this case, the lack of productivity. And that really is about how much, energy, how much money has been put into the public service sector in terms of jobs. Public sector is administrative. It is not productive. And although that creates jobs and it creates spending, it's consumer driven. That can't be considered productive. We have to look at manufacturing. We have to look at research and development. We have to look at exports in terms of getting our products out of the country, including oil, by the way. Now, having said all of that, we are not spending and supporting those SMEs, those small, medium enterprises. So we're not seeing an increase in the sectors that drive productivity, which is business and the private sector. Although the private sector is trending up, it's not even close to being in comparison into what we're driving into the public sector. That is going to keep productivity quite stagnant. So on top of productivity, we have to say, well, what does that mean? And when we look at productivity, we have to look at gross domestic product, our GDP growth. There's lots of conversations about the future. Is the recession on the horizon? Is it going to be a soft landing? Is it a hard landing? When we look at the data, it still looks like it's going to be pretty flat. Now, there's lots of things that are happening globally that could shift that. But as we sit here today, I think that ultimately we're going to stay flat. We'll go a little bit negative. I just don't see a hard landing unfolding. Although if you look at the headlines and you look at what's happening in a global macro and the wars that are unfolding, it could in fact shift quite dramatically. And at that point, we don't know. But we look into the future. If we look at Canada, productivity, we're going, okay, I think we can hold our own. So having said all of that, we need some changes to happen, and we need to look and say, okay, as investors, we look into the future, what's happening. So if we're anticipating a negative, slightly negative growth or flat growth, and then we have to look at, well, what is some of the supporting data around that? So we look at unemployment, and we see unemployment starting to tick up. Right across the country, we see small increases in unemployment. British Columbia is the low man on the totem pole, but having said that, their cost of living is the highest. Alberta still remains quite strong, but right across, we're saying that it's still well within the range of healthy. And although we were used to 5% and 5.5%, 6.5% is still a healthy number, but we need to keep an eye on it and see if it's going to be trending higher into the future. So when we look at unemployment and growing unemployment and we look at into the future, we have to say, okay, well, what do we have in terms of data that's going to support a increase in unemployment, things slowing down, what the economy is going to look like going into the future. And so when we look at this next chart, we're seeing that we have a headline called "Less Appetite for Hiring as Sales Decline." So that softening means that jobs are not being picked up especially in the private sector, of course. And then we look at the other side of that equation, which is something that we have to be very aware of. This is a flag that I've shown before, which is an uptick in insolvencies. Businesses are actually shutting down. Now, this is the wave that started back when COVID hit and there was lockdowns. Many businesses didn't survive right up front, but now a lot of businesses have been kicking the can down the road, so to speak, and we're starting to see insolvencies uptick. So we've got softening sales, but we've got insolvencies because of the financial pressures that many businesses were feeling, as well as the fact that borrowing money became really difficult in terms of how can you borrow capital at that percentage to grow your business, to buy inventory. And we're starting to see and feel the effects of that showing up. Now, will it continue? We got to keep an eye on it. Strong argument that it will, but it may just in fact flatten. This is some of the data that we're keeping an eye on. Okay, so when we look across the country, we have to also look at provinces that are strong economically. We keep coming back to Alberta. I mean, one of the things that we see in Alberta, which has been a trend for actually many years now, which Alberta continues to be that province with the highest paid weekly average incomes, the lowest cost of living, the lowest tax base overall. And I know that if you're living in Alberta, you might argue a few points around that, but ultimately you're also making more money in Alberta. So for us as investors, when we look to Alberta, we see the opportunity as investors because we're seeing tenants or we're seeing people move into that province, they're being paid well, and we're seeing relatively low rents when you compare it to what's happening across the country, especially when you compare it to what's happening in Ontario and British Columbia, the other two big provinces in Canada. We continue to look at population growth in Canada, but I'm also showing this chart here, which shows population growth in Alberta. So in other words, Canada is growing, so is Alberta. I mean, it's not that Ontario, for example, or British Columbia isn't experiencing population growth, but Alberta, relatively speaking, continues to lead the way. And especially when it comes to interprovincial migration, a lot of people from British Columbia, again, and Ontario moving into Alberta. That speaks to the affordability issue that is at hand. Now, as investors, good news for us if we're investing in Alberta. It's why we continue to shine a light on Alberta, specifically Calgary, but also Lethbridge, Medicine Hat. I guess really when you look at Alberta, any of the major cities have had strong growth, strong population growth, which of course is what's driving the rental market. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.